Here we have 3 candles. I want you to have a look at them, pause the video, and then tell me what you see in terms of supply and demand. I leave you 5 seconds to pause the video or to take your time to think of your answer. For the candle A, we can say that the buyers were in control from the beginning to the end. The demand for the currency pair was higher than the supply. Regarding the candle B, we can say the opposite. It's obvious that the sellers have the power at the moment and are pushing the price down. So we say that the demand is lower than the supply for that currency pair. The candle C shows that there's an even fight between buyers and sellers. The price went up and down, creating new highs and lows for the session that we can see from the shadows, but then it closes near the opening. Supply and demand are in balance. I think that it is quite easy, but I invite you to have a look at other candles and try to make your deductions on what happened during that session. An exercise that can help, especially if you're not familiar with candlesticks, is to open your MetaTrader, select 15 minutes as a time frame, and have a look at the new candlestick from the beginning till the end. It will give you an idea of the formation process of the candlestick. So what time frame should I use? In the first course, this has been the most popular question. My answer is always the same. It depends. If you go to a financial advisor and say, hey, I want to buy some government bonds, the first thing that the financial advisor will ask is, would you like to invest in short-term or long-term bonds? So if you ask me what time frame should I use, I will reply, it depends on your time horizon. If you want to plan long-term investments, holding your position for weeks or even months, then weekly and daily charts are good for you. In any case, I always suggest to analyze the daily chart, even if you are planning to trade on shorter time frames. Daily charts can be used to keep an eye on the market's overall direction. They say that trend is your friend, so seeing the bigger picture on the daily chart can help you to trade on lower time frames in the same direction of the prevailing trend. Unfortunately, I have seen many traders focusing on short-term price action, forgetting about the daily chart to analyze the main direction of the price. Don't do this mistake. Every morning, take 10 minutes to check your daily charts and see if something has changed. Which time frame do I use? I mainly use the 1-hour chart, and I explain you why, so you can see that the reason is strictly personal. People who know me know that I decided to become a forex trader not because I want to be rich, but because I want to have time for myself. So I want to be able to work 4 or 5 hours per week without checking the charts every single hour. For this reason, I never trade on low time frames like 15 or 30 minutes. At the same time, I don't want to get bored holding my positions for weeks or months. That's why I tend to avoid daily and weekly charts. So now you know why I mainly use the hourly chart, and sometimes I also use the 4-hour chart. So once again, what time frame should you use? It depends on you. If you are very busy and don't have time to trade, you can focus on the daily chart or the 4-hour chart. If you have more time to dedicate to forex trading, you can also consider to use the hourly chart. In any case, I don't recommend time frames lower than 15 minutes because it will expose you to daily trading noise and random movements that will give you a lot of false signals.